The IRS ended its Offshore Voluntary Disclosure Program, or OVDP for short, on September 28, 2018. So what does this mean for taxpayers who have not made a disclosure? What should they do now? Are there any options left? In this video, I'll explain exactly what paths remain open for those worried about FBAR penalties, the myriad foreign reporting penalties, and criminal prosecution. First thing, good news, most people don't need the full OVDP. Since June of 2014, when relaxed streamlined disclosure rules were announced, we still have had thousands of taxpayers from every corner of the globe call our office quite sure they must use the standard OVDP and pay that 27.5% or 50% penalty that the program calls for. But after we talk to most people, we find that the Streamlined program is far more appropriate for them. The benefit of the Streamlined program is that there is a 0 or 5% penalty and only a 3-year look back for unpaid taxes. So not only is the tax and penalty bill lower, but so too your attorney and tax preparation bill. It's really why we like the Streamlined program, which, by the way, is still open. The problem is that taxpayers have a difficult time assessing their risk profile. What we find is that people who should be scared to death of a criminal prosecution often aren't. Meanwhile, taxpayers who are convinced that they are going to prison tomorrow actually have a small risk of prosecution. What program is best for you is really something you need to talk to an experienced tax disclosure attorney about. Additionally, many taxpayers don't even need a streamlined disclosure. So many of them are able to just file delinquent forms to solve their problem. Here's the second thing. A voluntary disclosure program must always exist, and there's nothing the IRS can do about it. Congress actually mandates that the IRS always have a voluntary disclosure program open. So you might be confused. How can the IRS end the OVDP if this is true? The reason is that the OVDP is a specific type of voluntary disclosure. Voluntary disclosures existed long before 2009, which marked the first Offshore Voluntary Disclosure Initiative. And these disclosures were primarily used to protect against unreported domestic income. For instance, let's suppose a taxpayer owns a regional U.S. pizza chain and intentionally did not report sales that were paid in cash. Now he is worried that someone, his ex-wife, may whistleblow and he could be subject to a tax evasion indictment. Well, that person, even though he has no foreign income or assets to report, would be an ideal candidate for the standard generic voluntary disclosure program. So for domestic tax evasion, you would use that plain old voluntary disclosure program. If international tax evasion was involved, the IRS forced you to use the OVDP. So now with the OVDP gone, the only type of voluntary disclosure left is the plain old generic voluntary disclosure. You still might be a little confused, so let me try to explain more. The OVDP was a combination that offers the generic voluntary disclosure protections from criminal prosecutions, along with a predetermined offshore penalty scheme of either 27.5% or 50% of asset base. So really the only thing that ended on September 28th is this second item. There is no longer that predetermined offshore penalty scheme. However, you can still get protections from criminal prosecution by getting into the generic voluntary disclosure program. So it's wonderful that you can still get protections from criminal prosecution. But what about protections from massive FBAR and foreign informational return penalties? Unfortunately, with the OVDP penalty scheme now gone, each taxpayer making a generic voluntary disclosure of foreign income and assets will likely be subject to an IRS examination. The IRS examination is where FBAR and foreign informational return penalties may or may not be assessed depending on how well your facts and circumstances are developed. The good news is that the standard of review for such an audit is very much akin to the OVDP opt-out standard, which has delivered some remarkable success for many of our clients. Their OVDP opt-out penalties were much lower than the standard OVD penalty that they thought they would have to pay. If you are concerned or confused about what to do, contact us. We are truly passionate about protecting our clients from an IRS that is truthfully out to hit good people with ridiculous penalties. The IRS has changed so much in the last 10 years. The FBARs and international forms that the IRS never cared all that much about have now become a primary focus. I strongly recommend having a team on your side that understands the true nature of this IRS machine in order to maximize your chances of success. This is Anthony Parent of Parent & Parent LLP, IRSMedic. I thank you for watching.